Whether a first-time home buyer or if you're jumping back into the housing market for the first time in several years, you're making the biggest purchase, single purchase in your life. You're trying to figure out what's the best home loan for me. Best terms, best rates, gonna allow me to get into a property I truly want to be in. How do I make sure I'm getting in the best loan product? If you're not already in the finance or lending space or field for a profession, 9 out of 10 times it's probably very confusing and nuanced to figure it out. And it's hard to trust every professional that you sit down with to figure out if they're giving you the best guidance. So I'm gonna give you some context and a foundation on how to know you're getting probably the best home loan possible for you, or how to sort that out for yourself. I'm also gonna tell you why I believe one particular lender or institution has some of the best options available in particular. We're gonna cover that in this video. This is JP from Blueprint for Prosperity. To all my pioneers out there, welcome back. To all my new viewers, welcome in. Like the video, subscribe, and we're gonna get right into it. So the foundation you wanna lay on getting the proper home loan product, you wanna first match it up to your financial situation. Home loans are gonna be pretty, for the most part, cookie cutter. What I mean by that is that they're going to have fixed terms and conditions for almost anybody applying for them, with the only major fluctuation being the interest rate you can get on that loan, which also has just a fixed range that you can get. So there's a top and bottom to each different loan product. Those interest rates are going to largely be predicated on how risky of a borrower that loan is attracting. So if it's a zero down loan or a low down payment loan, it might have slightly higher interest rates because you're putting less skin in the game. For instance, if it has no PMI, private mortgage insurance in it, another higher risk factor, probably going to have higher interest rates. Just a couple indicators. Your best rates are going to be on the loans where you're required to put a sizable 10 to 20% down payment down. Credit requirements are pretty high. You're probably going to get the best interest rates in that range. And that's usually going to be conventional 10, 20% down loans. You can get some pretty good rates on USDA loans, which are, rural development loans issued by the government. But those are going to have lower DTI requirements, which we're going to talk about that a little bit more in this video. So I wanted to lay that context out. First off, most loans are going to have very fixed terms that you have to fit into that box. Okay. So what you want to do is figure your financial situation out. Where's your current credit? You need to check your FICO scores, and you need to check your all three bureaus' FICO scores, and take the middle one out of the bunch. And there's a specific FICO score for mortgages. So you don't want to necessarily get a FICO score that's around, a different model within FICO that's not quite the mortgage score. It's a very specific FICO score. So you need to check on that first. You're probably going to have to go through My FICO and pay for it to get it in advance if you don't let a lender pull it for you. The next thing you want to figure out, your down payment amount and your job history and your income, and your DTI. You want to figure that combination of things out, and that'll give you a pretty good range on what type of loan you're going to fit best. Also, things like if you're a veteran or not, stuff like that. For the most part, if you're not military, then you're going to be looking between a few loans, and you're going to best determine the loan that's going to fit you best by your financials first. What's my middle mortgage FICO score? What is my DTI, debt to income ratio? Meaning, how much is my gross monthly income versus my gross monthly expenses reported on my credit report? Once you figure that percentage out, the next thing you want to check is your down payment. You want to check these things out, and that'll give you a really good indication of what loans you might qualify for, because you might get ruled out immediately if your credit isn't at a certain place, if your DTI is too high, if you don't have a sizable down payment. You can weed out a bunch of loan products just on that alone. The next thing you want to go off of is where you're looking to buy and how much home you're looking to get. Where do you really want to be? And so, because there's loans that are like, again, USDA, that's rural development. You can't use those inside of metropolitan limits in most cases. So within city limits, in most cases, you have to go more to the outskirts of suburbia and beyond to use USDA. For instance, FHA is going to rule out a lot of properties that may need work. They're very strict on the inspection process. You see where this is going? Conventional loans are going to be the ones that are a bit more lenient on inspections and you can use almost anywhere, but then they're going to have, on average, higher down payment requirements or higher credit requirements or both. So you want to check that out. That could have a fluctuating DTI. Most conventional loans are kind of controlled by the institution, so they're not as fixed. So with that foundation laid, hopefully that made sense and gave you a calculation to go off of. And I advise you use a mortgage affordability calculator to play with those, to help you look at those numbers, especially the DTI part. The credit is pretty straightforward. Your down payment is pretty straightforward. Got to do a little bit of math to figure out that percentage on your DTI, front end and back end ratios. How much is the mortgage payment by itself within your gross monthly income? And how much is the total monthly expenses, housing expenses, and whatever other debt you may have in conjunction or, against your total grossly month income. So those are your front and back end ratios. You need to do a little bit of math to figure that out. And you might do best getting on a mortgage calculator or an affordability calculator to help you in that process. So what institution is it that I am, clearly have given away in the thumbnail already, but what institution is it that I'm saying may be one of the most attractive options for the best home loan? That is going to be Navy Federal. Why am I saying that? Well, Navy Federal is a pretty unique lender and institution in the marketplace. I actually shot a few videos on Navy Federal. I've shot one in particular that was getting some traction around why Navy Federal is one of the best institutions, if not the best institution to be with during the banking crisis. And some of the same things I named in that video are exactly why Navy Federal is a very attractive home loan lender. Navy Federal's loans that they control, so not any FHA or government issue loan that they may push out. We're talking about their conventional and their specific loans that they control the underwriting on. Those loans are going to be their conventional and what's called their home buyer choice. That loan in particular is one of the most attractive loans out there. First off, Navy Federal does not require private mortgage insurance on any of their home loans that I've seen. Very impressive right out of the gate. For those of you who aren't familiar, private mortgage insurance is going to be the insurance that you have to pay to cover the lender, in case you default. You're basically paying an insurance premium to ensure that lender can get made whole if you default on the loan. So that's called private mortgage insurance. It's almost always there if you're under 20% down payment on a loan. If it's FHA, you have mortgage insurance premium, so MIP, and that's there for the life of the loan, regardless of the 20% threshold or not. So Navy Federal does not require PMI on any of their loans. That's the number one thing that makes them very attractive. The next thing that's going to be really attractive about it is Navy Federal has a zero down conventional option on their home loans. So on top of their conventional low down payment, they have FHA, of course they have VA. Their home buyer's choice loan does not require any down payment at all if you're cash strapped. That's a great thing as well. Now, mind you, as I told you earlier in the video, that does mean the interest rates on this loan is a bit higher than the other loans that are available. But again, it is kind of offset by that private mortgage insurance because that typically is, maybe like a 1% of the loan amount, some percentage of the full total loan amount. And that in itself can make a dent in your affordability in a good way, meaning that you not having to pay that can kind of make up for a higher interest rate. What is the most attractive feature that I learned about Navy Federal that makes them one of the most, if not the most appealing home loan lender in the marketplace if you're in the market and do qualify to be with Navy Federal as an institution, as a member of their institution? Navy Federal's home buyer's choice loan has no fixed DTI requirement. That is very impressive, and I'm going to quickly explain why right now. So as I mentioned, DTI requirements are going to be your debt to income ratio determined by your gross monthly income versus your monthly expenses reporting on your credit report. So again, not your groceries and your gas and your cell phone bill, but anything reported on your credit report. Those two things break out into a percentage called debt to income ratio. Most loans, almost all loans, conventional, FHA, VA, USDA, all have DTI requirements, and they fluctuate. USDA's back-end DTI requirement, for instance, is like 36%, meaning that 36% of your Total monthly gross income is how much you're allotted to have in your housing costs and your other total monthly expenses. Okay. So that's the most you can have to qualify for USDA. FHA on the other end goes up to 43 to 45% range. So they are a lot more flexible. There's conventional loans that are a little more flexible per lender. Some lenders go up to 50% on conventional. You see as low as 36% and anything in between on conventionals. Home buyer's choice. Because Navy Federal is not only the largest credit union in the country and a big, strong, stable institution, but because they're a credit union, they're able to build more of their products out around their members. And this allowed them, and they made the decision to not put a DTI, fixed DTI parameter on their home buyer's choice loan. What that means is that they take 2 years of your total financial picture. So they do want bank statements. They do want to look back on your credit report. They want to look at your job history, so on and so forth. But looking at your total financial picture, they specify a DTI around your financial picture. So that's a phenomenal treat that is baked into their home loan, because that means that you get a fair shake as the borrower at getting the house that you truly desire if you've been responsible with your finances. You can separate yourself from the pack if you've kept a healthy low DTI, if you kept paying on all your bills on time and have a strong credit report and credit profile. If you have either, a solid cash reserves, they're still going to care about reserves, even though they may not ask you to put anything down. So if you have these things in play and show a full, healthy financial picture, and they're looking at about a 2-year span of time, then you can end up with a very flexible, open DTI with them. And that could allow you to get a high quality home in this housing market where interest rates are very high, and it's cutting into people's ability to buy homes that they really are attracted to or desire. So this is a very powerful feature, as you can see, because you're not boxed in based on that loan's requirement. It's strictly up to how you manage your finances. And that's a very powerful thing. They're likely going to trust you more with a broader DTI if you have strong financials, great DTI ratio, and good cash reserves or great credit, whatever the mix may be. The more likely they're going to trust you with a broader DTI. That directly impacts how much home you can afford. So instead of, being boxed into 36, 43%, they may be higher, significantly higher to an extent, of course. I'm sure there's a limit, a soft limit somewhere in there. But that could lead you the ability and the flexibility to get into the home you truly desire, which I believe right now is an amazing buying time because housing rates are so high. Sellers are being forced to, make concessions, bring down their prices. And when rates drop, we still have an inventory crisis in this country. So that means that housing pricing is highly likely to shoot up whenever the Federal Reserve is done raising rates and starts to taper them back down. So you can end up through Navy Federal and that home buyer's choice loan in particular, getting in on a property you may not normally have gotten your hands on in most other loan options, and get in on a property that could appreciate greatly because you got a great property in a great neighborhood once rates go back down. And Navy Federal allows you the ability to lower your rate without needing to refi in certain scenarios. Check that out in their terms and conditions. But there's a feature called a no refi rate guarantee where they'll allow you to lower your rate depending on the terms and the time frame and circumstances without even needing to refinance if you get their loan and fit the bill. Phenomenal institution. There's incentives through their realty program. If you use one of their realtors, there's incentives on the table from them just as a lender. Ton of money on the table. They're all in one and all inclusive. You have a lender built into them. They have a realtor network. Just the whole 9 yards, a full banking relationship. Navy Federal is a phenomenal institution, and I think they have some of the best products out there, and I think they have one of the best home loan products on the market. So I wanted to bring this to you to give you that foundation and also give you where to look and why to look for that, for lenders, and what should be considered attractive if you're either new or just getting back in for the first time in a long time. I know this information was valuable and I truly enjoyed bringing it to you. I hope you took notes. I hope this made sense. Watch the video again if you need to. Let me know in the comments down below where you are in the home buying process. Are you on your first time buying? It's just, it's your next time buying, but it's been a while. Let me know what questions that you may have. If you want more insight on different lenders, different products, Whatever you need, drop it in the comments down below. Before we get out of here as well, if you want to support this video, besides leaving a like and subscribe, and of course, thank you for your viewership, there are a few links down below, referral opportunities with some great lenders for some great credit cards that you can get in great welcome bonuses, build and expand your credit with prime institutions, and support this channel at the same time. So use those links in the description to do so. Other than that, to all my pioneers out there, I appreciate y'all for tuning in. And as always, I want you to stay focused, stay in motion. I'll see y'all soon. This is JP from Blueprint for Prosperity Network, a channel dedicated to helping you increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity.